Good morning, friends. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that could be in focus for the day as well as for the next few sessions. Now, post the gap down opening yesterday, we saw the index continuing its negative momentum and it retested its key support level of 19,330, which we had already discussed yesterday morning. And in the second half, we saw a stellar recovery in Nifty from lower levels, and finally, index ended the day 0.5% lower at 19,435 levels. Now, despite HDFC Bank gaining 1.5% to rebound from lower levels, Bank Nifty ended the day 1% lower, and this was mainly led by selling pressure which was visible in Axis Bank, IndusInd Bank, and PSU Bank names. Also, we saw a cut in the mid cap and the small cap indices, which underperformed the broader markets, as both these indices lost anywhere between 1.25 to 1.5% respectively. Now, coming to global markets, dollar index is sustaining around 106.80 107 levels still, which is at a multi-month breakout zone, and even the US 10-year treasury yields are sustaining above 4.75 levels. It had made a high of 4.88, but it is still closer to that level, and this is the highest level since 2007. So that is leading to the upside getting capped as far as the broader equity markets including Nifty is concerned. However, one piece of good news is that the correction in Brent oil prices, which almost it's to the tune of 9 to 10% from $94 a barrel, which was seen earlier this week. So I feel that this is one important news that we should not be ignoring. And also one more important point is that after the 3 consecutive days of negative closing, we have seen US markets closing in positive. So that also needs to be noted, and this is mainly because yesterday we saw weak ADP labor market data, which indicates loosening of the labor market, and from the data perspective it is bad news, but from the policy framework angle perspective this is good news, as this would now prompt the Fed to go slow on incremental rate hikes. Even weekly jobless claims and September non-farm payrolls data would be out today as well as tomorrow, and these piece of data would be the most crucial to track, as this would impact the US markets. Also, it would impact the 10-year yields and the dollar index. So one more thing about the 10-year treasury yields is that this particular chart is at its channel resistance of the last 5 months. So fingers crossed, 4.65 4.6 levels would be the most crucial number to track here. In case we see the 10-year treasury yield slipping below 4.6 levels, that could be the first sign of a small short-term reversal in the treasury yields. And that's the reason why basically I feel that the markets discounted this part yesterday in the second half itself, and it held its important support zone at 19,330 and witnessed a rebound towards the end of the day, with the crude prices also cooling off from higher levels. So coming to index levels, overall trend is weakened and indices have closed at its lowest levels of 21 sessions yesterday. And with this move yesterday, indices have come back in the old trading range of 19,250 and 19,550, which it was trading for the major part of August month. So going forward with weekly expiry today, the crucial resistance levels for the day would be 19,530, 19,570 on the upside. Now only a move beyond this 19,570 mark could trigger a sharp short covering move up to 19,650 and 19,700, where the 20-day exponential moving is placed. Now support today would be around 19,350 19,380 mark, and in case this is breached, then only we could retest 19,250 levels on the downside, where the 100-day moving average is placed. And this level assumes importance, as this level had acted as an important support for the entire August month. So overall range for the day could be 19,350 360 on the downside and 19,570 19,580 on the upside. But friends, one thing I would like to tell everyone is that just be cautious in these markets, as it's too much of data driven momentum that we are seeing, and the way to trade such markets is to let important resistances cross, and for me the next biggest and the most important resistance is 19,700 on the upside, where the 20-day exponential moving average is placed. Coming to Bank Nifty, the key support for the banking index now lies at 43,600, 43,750 zone, which were the swing lows of the August month. So this zone is extremely important for the next few sessions, and any move below 43,600 could lead to an acceleration of the profit booking move up to 43,100, 43,200 levels. Key hurdle now on the upside would be around 44,350, 44,450 zone, and a sustenance above these levels. Index could witness a short covering move up to 44,800, 45,000 on the upside. Now going forward, important trigger for the banking stocks or for the markets overall would be the RBI monetary policy announcement scheduled on 6th of October tomorrow, and hence I feel today post positive opening indices, whether you talk about Nifty or Bank Nifty, could trade in a range between, say for Nifty it could be 19,370 on the downside and 19,570 on the upside, and for Bank Nifty it could be 43,700, 43,800 on the downside and 44,400, 44,450 on the upside. Now coming to stocks and sectors that are looking positive, yesterday indices witnessed a rebound from the lower levels of 19,330, 19,350 zone, primarily on account of the rebound in few large cap stocks such as TCS, HUL, HDFC Bank and Infosys from lower levels. Even Reliance towards the end of the day attempted a recovery from its 200 DMA zone of 2290, 2295 levels. Yesterday, long build-up was visible in Ramco Cement, Nestle, Escorts, and TCS, and all these stocks are looking positive on the charts as well as from the short-term perspective. Also, with crude oil prices correcting, there could be some action in the oil marketing companies, the paint stocks, the tire stocks, which are generally sensitive to changes in crude oil prices, and we have seen a decent correction in these names. So there could be some pullback visible in these counters. If we observe the FII data, FIIs have been net sellers in the cash segment to the tune of 4,424 crores, while DIIs have supported to the markets, being buyers to the tune of 1,770 crores. FII's long short ratio for index futures has dipped to 24-25%, and which is extremely negative from the index futures positioning perspective. FIIs have sold index futures to the tune of 6,335 contracts. They've even sold stock futures to the tune of 86,163 contracts. Now, friends, this is one of the highest numbers that we have witnessed in the stock futures selling. So this remains an important concern point. On the options front, FIIs have sold closer to 12,128 contracts of call options, index call options, and they have even sold 33,217 contracts of index puts. So tracking this data, it seems negative. The data indicates negativity, and it's more of a scenario where FIIs are expecting higher volatility on both the sides, and that's why I feel one should be a bit cautious in terms of over leverage positions in stock futures with the kind of sell figures of FIIs that we have seen in stock futures yesterday. So just to summarize, we expect indices to witness buying support on dips around 19,350, 19,370 zone, and resistance could be around 19,550, 19,570 on the upside. Bank Nifty key support zone could be 43,600, 43,750 zone, which were the August month lows, and the resistance could be around 44,400, 44,50, 450 on the upside. So friends, that's all for today. Thank you all for regularly listening to our podcast, and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.